Hello and welcome back to the Home Selling Homies podcast. Today we have another special guest. It's Adam Karcz with Nexa Mortgage. Thank you for coming on the show, Adam. And I know you're at home, quarantined just like the rest of us, but glad we get a chance to talk.
Yeah, absolutely. Thanks for having me, guys. Appreciate it. I started the quarantine about a month before everybody else did it working from home. So I did it before it was cool with COVID, I guess. But yeah, that I guess is a good little segue to tell you a little bit about what I'm doing. So as of February 1st, I started as an independent mortgage broker and the branch manager with Nexa Mortgage here in central Wisconsin. I've been helping you guys in the on the real estate side of things as a lender for the last 6 or 7 years, previously with Incredible Bank, and really just wanted to branch out and get something started of my own. So that's really what the move was all about. They did a lot of good teaching me a lot of things there. It was just time to do that. So a lot of people might know me from that aspect of things, but it's good stuff. That's what I'm doing nowadays.
So you're enjoying the independence or the freedom of just working for yourself.
Yeah, absolutely. That's really what it was about, was just being able to create the process from start to finish, how I kind of wanted to shape it and give my customers the experience, I guess, the way that I think is important. And that's really based around their overall financial goals and really breaking things down like that. So having a lot more control over the process this way really allows me to service my customers to the best I see fit. So yeah, enjoying it.
How is it different than working at a lending institution that is local? Because you're sort of a branch of your own, but you're a broker, which is, I don't know that a lot of people really understand what that means.
Yeah, I definitely didn't understand the difference until you explained it to me when you were first talking about it.
Well, yeah, so I can definitely break that down. So in the mortgage world, in the end, I like to use this analogy. We're all kind of playing in the same sandbox because we're all working with the end investors of Fannie Mae and Freddie Mac, kind of the big government-backed investors in that space, as well as like FHA and VA and rural development loans. But inside of that, so after that phase, there's a whole nother set of, I guess, middlemen. So it's the lenders that are going, that are packaging up and selling those off to Fannie Mae and Freddie Mac and those other different investors. And there's a whole bunch of lenders out there that are doing that. So some of the big banks are going directly to them. And then there's a lot of the independent brokers that, like what I'm doing, are actually working with all of those different banks and those other opportunities out there. So right now, instead of having just one specific set of guidelines to follow with the bank requirements, I actually have 65 to 70 different lenders available to me that I can ultimately shop for the customer and just make sure they're getting into the best position possible. Because some of those lenders are really specifically made for VA. There's a few of them that are really, really good at doing VA loans, for example. And having the opportunity to shop for that veteran for me was really kind of a neat thing. But being able to gather the information from the customer, and if they're a good solid borrower, say they're an 800 credit score with 20% down, just pristine kind of scenario, I can ultimately go out and say, hey guys, this is what I have. And those lenders will ultimately battle for that scenario and say, this is what we're going to offer you for that loan. So that's what's I guess the big difference is. Does that kind of breakdown make sense, Phil, with what you're looking for? Good.
Yeah, absolutely. Good. Gives you the idea. So you're working with, you just have more opportunities and more people that you can shop to, basically.
Yeah. Yep. Yeah, and each one has kind of their unique niche, which is really cool. So some of them are specific to those different scenarios. What's that, Laura?
Sorry. For the consumer, that means that the rates that are quoted locally, like let's just say somebody has 20% down and is going to do a conventional loan through a lender, and lenders through banks put out the rate sheet daily that shows the fluctuation of the base rate, but you're saying that you get to actually shop those rates. Is that right?
Yeah. Well, yep. So instead of just having that baseline of what that lender says being the only option, I have the opportunity to go to a different lender if it doesn't quite fit or is the best opportunity for that customer. So that is really nice in that sense. Just for an example, right now we're seeing some crazy stuff where rates are anywhere from, honestly, they're anywhere from 2.5% to 5.5%. Like it's crazy. And there's no rhyme or reason to a lot of it other than the fact that some of them are in very financial dire positions and they can't afford to bring on any more loans. Some of them are overwhelmed with a crazy amount of volume. So then they'll kind of taper back their rates to slow down the volume. So it's just kind of neat to be able to time that a little bit and have those different opportunities at that any given point in time.
Mm-hmm. We kind of ran into the situation on a deal where there was a conversation about the difference in closing costs. Do you want to talk through that?
Can you give us
So
the breakdown of what?
Go ahead, Phil.
Give us the breakdown of what a closing cost is, and because sometimes people hear the word closing costs and they, everyone thinks it's 10 different things. So a buyer's closing cost for their loan.
Right.
Yeah. So there are,
which is separate from title companies. Let's just kind of shimmy that out a little.
Separate to a point, because the buyer's stuff is going to typically be built into what the buyer's title costs are typically going to be built into what the lender's costs are or what they're saying for those closing costs. So when you're looking at a loan estimate, which is the initial document that you get when you're applying for a loan, and it's a part of the initial disclosure package, and it does a fairly decent job of breaking down the overall cost of it and what it's going to look like. But on there, it actually lumps two different types of costs into the closing costs on that document. Really, there's the loan closing costs, and then there's what's called the prepaid items. So the loan closing costs are built up of what it actually costs to get the loan. So there's going to be maybe an underwriting fee or maybe a processing fee, the title work, so the closing fee at the title company, as well as the lender's title policy, and then the appraisal fee. Those are going to be fees that are going to be disclosed as loan fees ultimately. And then the prepaid items, which is what often actually skews the numbers quite a bit. And what those consist of is your initial 1 year of homeowners insurance. So 12 months of homeowners insurance, you got to pay that up front. And that's built into the cost. And then the initial deposit into the escrow account for those taxes and insurance, if they're going to be escrowing for taxes and insurance, which 90% of the people do choose to escrow for taxes and insurance. And that can actually add a pretty decent chunk. Say taxes are $6,000 and you're putting, we're going to be closing in June, we'd be putting almost 10 months of taxes into that escrow account. So that can be a pretty substantial amount that comes through on that closing disclosure, the loan estimate as a closing cost that, if it's not explained properly by the lender, can really be confusing to the customers.
Mm-hmm.
Does that make sense?
Yep.
Yeah, absolutely.
Cool.
Adam, I know something else that you have talked to me about in the past is the Proud Dollar. That's kind of your startup or on social media that I've seen a few times. Can you kind of talk about that and kind of promote that a little bit?
Yeah, for sure. That's something that I've had. It's kind of been a passion project of mine for a little bit. I'll be honest. I haven't been doing as much with it as I would like. I'm finding out that I'm not a web developer by any means. So I'm getting having some contacts with people to help me with that piece of it a little bit more. And as far as the video content and things like that, but I've shaped my, I guess my reputation, I believe, and this is what I've been trying to do, is shaping it around people's overall financial picture being the focal point of our conversations. And the Proud Dollar is a way for me to help people understand just general personal finance tips and tricks, breaking things down, understanding inflows and outflows, and really helping people have resources to set a game plan around their overall big personal finance goals.
Hi, Marta.
Hey.
Is this yours? I'm sorry, I didn't know I was interrupting the best people on earth. Hey, hi, nice to see your face.
You're on the podcast.
Welcome
I'm
to the
sorry,
place.
I'm totally
Episode.
interrupting. This is where
Phil's hard at work.
I think this is ours. Thank you.
All right,
That's great.
I'm just the male
That's great.
girl, that's all.
Take care.
Thanks, Martha.
Hey, Brad, some
Yeah.
things never change,
That's
ever.
all right. That's all good.
And this is a true depiction of what it feels like to be a realtor.
Yeah, for sure. No, that's awesome. That's great.
Yeah, no, and I think what you're saying is that you put a lot of emphasis on the education side of the lending, because you do get a lot of, well, and so do we, a lot of young buyers who don't really know much about anything about the lending side of things. But I think about that all the time when I have somebody who I know needs that education. I send them to you because I know that you're going to lay it all out for them and really explain it.
That's awesome, Brad. Yeah, no, I appreciate that, and that's really what I enjoy doing. I absolutely love that. I mean, honestly, if you really think about it, it's probably the biggest purchase or the biggest loan that anybody's going to have in their lifetime. Unless they're owning a business and doing something crazy like that. But buying a house is a big deal. And in doing it right up front or wrong up front can make or break the rest of your financial future. Because if you really overstretch yourself and you're married to your mortgage, there's a good chance you're not going to be able to put money away like you should be able to, or you should hopefully want to plan for a future retirement and things like that. So
COVID.
I think it's a really big deal. Or COVID, yeah, for sure.
Yeah.
I mean,
Forget retirement. What about like planning to take a vacation once in a while?
Right.
you got to do it though. I mean, and Laura, you make a good point though. You're seeing right now why it's super important to have a couple months, 3, 4, 5, I like 6 months of expenses built up just to be able to weather the storm if you have to.
Yeah, we're all in a unique situation because we're all self-employed. So it's nice to have something to fall back on that you can, well, if I don't sell a house for a little while, like the sun's still going to come up tomorrow.
Right.
Yeah, we talked about this a little bit on our podcast where people have been asking us, obviously, for years, should I get into real estate? We talked about if you aren't capable of figuring out how to budget yourself, that if you have a month and something happens in the market to upset, your normal closing or even have a closing in general. Some states are on lockdown completely where real estate is not, you can't sell, you can't leave your house. Photographers can't photograph. You can't do anything as a real estate agent. We're not in that position, thank God, but other people are. And so if you haven't built up your capability of paying yourself on a regular basis without having to depend on an actual closing to pay your bill, you're not going to make it in this business. And that's the same in life in general. And that's something that, just like Brad said, when I have people who are starting out this process of buying their first home, I want them to understand just because you are paying for a loan amount does not mean that's what you should comfortably be fitting in your budget. You need to think, am I going to have kids? Well, those kids are going to probably need daycare and they're probably going to need trips, and they're going to go through diapers, and they're going to go through clothes like it's going out of style, because it probably is. And then they're going to have to go to college, and then they're going to get married, and that costs money too. And how are you going to retire? And are you going to take those kids on vacations? And, all of those things are things that you're not thinking of when you're in your early 20s, maybe even your early 30s, and you haven't started that thought process yet. But this is exactly, just like Brad said, why I find it important for a lender to be on board with those thought processes, so that they're not just selling you the highest amount of loan because they're going to get paid more.
Yeah, and that's very true. We make more money the bigger the loan amount is.
Right.
But I don't believe in that principle.
A lot of times those buyers that maybe this is their first time buying a home, but maybe they have other debts out there, things that, might pop up at the wrong time unless the homework is done ahead of time, which is something I've always liked about working with Adam too, is that you don't just give away a pre-approval. You do a lot of work ahead of time to make sure that they are solid, because there are lots of surprises that can happen if you don't.
Well, I got a perfect example for you guys yesterday. I had a conversation with a borrower yesterday, a young couple, and they currently don't have an auto loan out, which is usually a pretty big chunk for people. So they're in a really good spot in that sense. But they their question was, what can I afford? And if I broke down the numbers, they were going to be able to afford like a $2,400 a month payment. They're not comfortable with that. I asked them, I flat out asked them, I was like, the better question here, guys, is what do you want that payment to look like? They're more comfortable in that $1,000 to $1,200, $1,000 to $1,200 range. I mean, that's double. I mean, I could have given them a loan they're qualified for, double what they mentally can be prepared for and do. So it's kind of crazy. And not having an auto loan right now, within 5 years, typically people have another auto loan. Like it's part of the deal. I'd like to think that everybody gets out of that cycle at some point, but in reality, it's not very common.
Right. I think that's an excellent point. I also really appreciate when buyers stick with you through all of the questions that, like, I know all four of us as agents ask our buyers. We qualify our buyers, because just running around and looking at houses and putting an offer in because it's available is not the smart way to buy a house. And I personally, I guess I can't speak for anybody else, don't want, to be going through COVID right now and finding that 6 of the 10 previous first-time home buyers I put into a home are now going to go into foreclosure because they weren't set up to be able to weather this storm, and then somebody lost a job. And these are important conversations, and I don't just take that stuff lightly. That's a responsibility that I feel pretty heavily when I'm working with first-time buyers. And I think that I don't know if buyers really understand that's why we go so deep in those initial conversations before we really start digging into looking at things. So I think this is a helpful conversation, Adam. I think you really helped bring that to light.
But that's good due diligence on your part, Laura. I mean, it's important to be there as a resource for them. It's not it's the majority of people, it's not their cup of tea to think about that stuff. And we got to be there as professionals to help them along in that thought process.
Yeah, you just nailed it. It's because we are professionals. That is our job. You don't know what you're doing, but we do. So if you can't trust somebody to help you think that stuff through before you commit to, like you said, the biggest financially you'll probably ever make, then what are we doing in this business? We shouldn't be in it if that's not what we're doing. I also think too that, I don't remember if it was you or somebody else that I was talking about this with, but to get first timers familiar with making a mortgage payment, it's really good idea to meet with you, figure out your budget. Some people don't even know what their budget is because they've never budgeted, but to start figuring out, okay, what are you pre-approved for? What are you paying for rent right now, if anything? And then put that money into a savings, like the difference between your rent and what your pre-approved payment amount is, a savings account for a few months to start feeling, what does that feel like? How does that pinch my social life? Is there anything that I need to do differently with that money situation and adjust, right?
That's super huge. And you know, you kind of hit it spot on there, Laura. And that's something that I want to do in the future with the Proud Dollar is kind of put together a boot camp for people to be not just all of a sudden deciding, hey, I want to buy a house.
Yeah.
But let's think about this. Let's prepare for it. It should be a multi-year process to be planning to buy a house in all reality, just to be able to put some money aside, have some money for reserves, because you know for sure that the furnace is going to go out within the first 2 years of you owning the house. I mean, it just seems to be and always a thing that always happens. So you just gotta be preparing for a lot of that. And I think it needs to be more of a longer term process. We're an instant gratification society for sure. I mean, there's no doubt about that. I want it now, but if we can kind of get that mindset shift to be looking a little bit further ahead, I think that's super important. And that's a big part of my goals and plans for the education aspect we were talking about.
We have 5 minutes left in our session. Is there anything else you want to touch on, and can you tell people how to reach you?
Yeah. So the best way to get in touch with me would be my cell phone, 715-219-4673 is my cell. Text me. Call me, whatever you got to do. I'm here and available all the time. Social channels, Facebook, got the Proud Dollar on there, and then my Adam Karcz home lender page, which would be more geared towards the next and the home lending side of things. But I mean, really check out theprowddollar.com. It's something that I'm going to be dedicating a lot of time to, and looking forward to getting some more education pieces out there. And that can always be a good starting point. You can get a hold of me through that as well. So, those are the best ways. And I mean, I guess I just, leave with my comment as far as, we're in some interesting times, and we're seeing why it is important to be planning ahead, and to be in that position. I mean, if I wouldn't be able to be giving this advice to people in the personal finance world, I guess, if my wife and I haven't practiced this for several years. And I'll tell you, having a peace of mind fund put away for this time frame has been amazing. I mean, it hasn't changed our thought process. And I just hope that we can help get people into that position. And, obviously the home lending side of things is a big piece of that. So, and just kind of shifting that mindset in that right direction.
Same here. There's a whole different empowerment when you are financially free, that you don't have the same anxieties and the same mental limitations in place when you're not, a prisoner to those payments.
Yeah, absolutely. And that's what a lot of buyers are.
That is a big deal.
Hopefully going to be learning.
Yeah. You guys have anything else to say?
Mm-hmm.
Oh, thanks for coming on, Adam. I really appreciate that.
Absolutely. It was great to have you. We appreciate all the information you share.
We appreciate you.
Yeah, for sure. Let me know if you guys need me
on the podcast.
Yeah, I'm glad to be here, guys. Anytime. Let me know.
We'll do. We'll bring you on as special counsel from now on when we have lending questions.
Absolutely.
I just saw that today, Joe Rogan podcast, he released another one with Elon Musk. So we have a pretty stiff competition, but Adam Karcz is pretty much there, I think.
Right there. Just put me in the same categories as Elon.
Yeah.
No one smokes grass on our podcast like on Joe Rogan. So
we got a plant right behind you, Phil. What is that?
We're a lot higher.
Yeah.
That's a rubber plant, and then the other one's some sort of, I don't know what that is.
Oh.
Martha's back.
I was just going to say.
She's back, popping in.
You want to do our outro?
Are we what?
Oh, Pam's back too. The whole crew's here. All right.
away.
On that note, guys, thanks so much for tuning in for this week's episode of the Home Someone Homies. You can find us on Facebook, YouTube, all that fun stuff. Have a great one. Thanks, Adam.
Guys,
Bye, guys.
good
Take care,
day.
guys.